That's almost as much debt that President Bush managed to accumulate over 8 years. If we continue to monetize the debt, what do you think is going to happen? Higher inflation? No. Take a look at Europe. Mutually assured economic destruction. Nah. All of our economies are connected. One goes down, it's like dominoes. Boom, boom, boom. It's where I've been warning it's headed our way. Now, I asked David Buckner, and I had him sit down because he passed out over at Fox. And, okay, David, I don't know when this is going to happen, but this is what it's going to look like to me. Okay? See, tell me where I'm wrong.
Okay.
Okay. You're already looking at it and you're like, this is crazy, Glenn, aren't you? Yes, you are. Okay.
It's aggressive,
okay.
Glenn.
No, it's okay. It's okay. Now, I don't have any idea if this is, let's say this is $2 and, 1 cent down here. I have no idea what this is. I'm just kind of making this up as I go. But this is the idea. The stocks are kind of going up and down, and they're going up, and hey, everything's great. At the same time, you'll start to see oil start to creak up because we're headed towards war, and everybody will play futures who know what's going on. The LIBOR, which is the interest rate that the banks pay each other. It's like, hey, do you have like $500 million I can borrow for 4 hours tonight? And they're like, yeah, you're trustworthy. I'll give it to you for $1 tonight. You just pay it back in the morning, right? And as the banks stop trusting each other because things start to get dicey, and they're like, okay, I know that we're not very sound, but I'm not going to tell you that. And you're asking to borrow money because you're probably in more trouble. The interest rate goes up, right? Right, the LIBOR?
Interest rate goes up as inflation occurs.
And as the banks
And you've identified, we've flooded the economy with cash.
Right.
Globally.
And but the LIBOR also is the banks don't trust each other.
They don't have confidence in the broader economy.
Got it.
They don't have confidence in the currency holding any value, which means they have got to drive it up.
Got it. And gold goes up. Now here's where it gets interesting. You're seeing gold go up, and the LIBOR at one point will start to go up, which you'll say, uh-oh, people are freaking out. Stocks will go up, and at some point, something's going to happen. The gold will go up. The LIBOR will start to go up, which will be a signal for those who know. They will sell their gold because they'll know this is about to collapse because the currency is about to collapse. So they'll know that the Dow and the Euro and everything else is going to come crashing down. They're going to have to pay it. So huge spike down in gold temporarily because they'll need the cash. They'll need to be liquid. This is what happened in 08.
Right.
They get the cash, they take it, and they pay off what they're now going to owe. It's going to happen real quickly. Then what happens here other than gold spiking?
Gold will have to spike. Gold here, as I see all of this, you're correct in the oil. You're going to get speculators. You've got issues of war. You've got Libya. You've got Iran. You've got Israel. So gold is going to continue, oil is going to continue to experience the spike. On that, people get more concerned about this. Now, the challenge here is they're going to move from this probably to gold first. The transition from stocks is I don't trust where the markets are going to go, which will precipitate this. Their transition to gold is a hedge against the volatility of stocks. The other side of that, hold on to that piece. So this works.
Okay.
This works on the gold piece, on the oil piece. The LIBOR has been flat for years. LIBOR is a very, very slow mover, but
it wasn't in 08.
Correct. And LIBOR started to get volatile, and yet, by the way, in 05 through 08, the United States had prime increasing as well from a Fed that said we're not going to increase interest rates too much, and then they kept going a quarter about every 4 or 5 weeks. So it was this gradual new normal. You're going to start to see LIBOR starting to shift when two things occur. One, when they recognize that not only the United States but others have flooded the economies with cash, and that cash is no longer worthless and is no longer of value. And number two, when there is so much debt, Greece contagion to Italy, Italy's contagion to France. You know that if Italy goes, France holds most of Italy's debt. Now who gets nervous? The UK, because they're engaged fully with France. And then all of a sudden Germany says, whoa, we don't want our euro, our currency, to be hurt because of these bad boys. France hasn't been a bad boy, yeah, but they were in the wrong place at the wrong time. So when all of that contagion starts to domino, Germany at that point in time says, you know what, I'm going to ask for more. I'm asking for more for the loans that we're putting, and that's what drives LIBOR up. You start to see countries that are now telling the central banks, you no longer can loan at a low rate. You're going to have to increase that because we will not lend, nor will we allow our money to be used unless the rates are equal to the increase that's going to have to come to the risk. So you're going to see this LIBOR going. Now, it may not spike as fast as the rest.
Right.
You are likely to see the oil going, and we've now explained this piece. The gold piece is the unknown, and this is why. We all know that gold is the inflation hedge. So if they're going here and they're saying that your thinking is correct in the sense that you say people may sell off gold to get cash to pay down what? Well, to pay down their losses, to get out of the markets, whatever, to live. But in the end, they realize that cash is worth nothing tomorrow. So you may actually see us, they're talking about getting rid of the euro. That's not just idle conversation. I've been in 17 countries in the last 4 months. That is not idle conversation. If they move from the euro, they go to this. And that's what would cause a barter system. We'd be back to, primeval times where we barter for the time that we have, and gold would be a piece of that, as would any other commodity. Here's where it gets scary. Food. Now they start moving from gold and commodities into the food market, and that's where you start seeing what will happen to gold. Gold could go skyrocket without the drop because they wouldn't cash out just to get there. They would walk away and say, the only thing I got of value is my gold and food.
Holmes has done this. Farmland has done this.
You are likely to see
this is current.
Yes.
Farmland is going
this is
up.
The current,
homes are still going down.
And homes are going down, but if indeed this starts to, if the euro crashes, which we're on that path, my friend, and if you see the oil spike, well, the euro, they're going to they have to cross the bridge in the next 3 months. They have to cross the bridge. Germany's going to have to decide, will we go down with the bad boy?
Will they?
Germany has been tenacious about the austerity. And if Germany can maintain the austerity with their foot on the throat of Greece, without Greece having enough power to come back, they could make it through austerity. But Greece is still saying, we're going to riot for our rights. What, to retire at 55? There is no money. If Germany cannot put its foot on the throat of Greece, and the contagion, which is already gone, we already have 2 new governments. We've got Greece and we've got Italy. The contagion goes to Italy, and Italy all of a sudden starts to impact France. All of a sudden, Germany says, you know what? I can't do this. I'm taking the Deutschmark back. And that's the point in time. They're going to cross that
David,
by February.
I've heard both. I've heard that they are, we only have about a minute. I've heard that they are already printing the Deutschmark. I've heard they're preparing to print.
They could be, and I don't know that. I've been there.
I've heard both.
I was in Frankfurt.
I've had really credible sources say absolutely not true, absolutely true.
I've had the most viable sources of business leaders in the area saying it wouldn't be a problem for us to go back to the D-Mark because, candidly, we don't need to be the paternal brother that takes care of everyone else. So I've heard that they don't have any concerns about doing, but what would that do? It would cannibalize all of those smaller economies, and I'm talking about all of them.
How's Russia?
I was in Russia in September, and Russia, not only being, there's a lot of corruption that still, they're trying to vet through the capitalism component. You know, I walk out the door and they say the #1 thing you need to be concerned about is having your documents on you, and it's not mafia and it's not crime, it's the police.
KGB again.
And I had a guy drive me by, and I said, and he shows me the KGB building, and I said, so that's where the KGB is? And he goes, no, the KGB is everywhere. This is how many years after? And he says, no, we're still there.
Oh yeah, yeah.
We're still, and there's no regulation. There's no groundwork. There's just free with a market, with a kind of planned economy sitting on top of it.
That's what democracy looks like.
It's pretty frightening.
Yeah. David, thank you very much.
It's good to see you.
Yeah, good to see you. Back in just a second.